Not many realtors will tell you this, but I'll share with you one evergreen strategy for your real estate, and you will do well in the long run. Hi, my name is Sean, your trusty realtor. So one tip that I have for today is if you bought your home like 10 years ago, holding that property for another 10, maybe 15 years, it's going to be the best strategy for like 90% of you out there. Obviously, this is not a financial advice, and there are three main reasons why this strategy is a good one. The first reason is it's an obvious one, but it's a home appreciation. In the last 10 years or so, the home prices have appreciated so much. So let's, for example, if you bought 10 years ago, that's a 2013. 2011 was pretty much the bottom of the real estate market after 2008 crash. And by 2013, home prices were just recovering. And if you bought at that time, you probably doubled your home price in the last 10 years, close to it at least. So holding that property for another 10, 15 years, I can't guarantee it, but more likely it's going to appreciate. Who knows by how much, but it will. Just so you know, in the last so many decades, if you look at every 10 years, there hasn't been one situation the homeowner lost their home value. They always gained. So the magic number is 10 years, it seems. Even with the worst crash that we experienced with the financial crash in 2007 and 9, 10, everything made back up to pre-crash level. So just focus on the 10-year period when it comes to home appreciation. The second reason is that debt reduction. What I mean by that is when you get a mortgage, when you hold on to it for a long enough time, you end up paying down a lot of the principals. So basically you owe less money over time. And after the first 10 years, more will come down. So it will come down faster because the first about 7 to 8 years, most of the mortgage amount goes toward the interest payment, which helps banks to recoup the money that they lend out. If you sell in the first 10 years, most likely you pay most of your mortgage payment toward the interest payment. So you're not going to get a lot of equity payment lower to enjoy that equity building. If you look at it from the banks, the lender's perspective, they make more money when people sell every 7 to 10 years. Because the banks are going to make the most money in the first 10 years so that they sort of encourage people to buy and sell every 10 to 7 years. But here's a realtor that you're not going to hear this from many realtors, like I said earlier. In my opinion, it's better gain for individuals, not so much for the bank. I'm sorry, banks, but holding real estate long term is one of the easiest way to build wealth in this country, at least. There are few side tips that I would like to share to accelerate that debt payment speed. So you pay more down in shorter time. There are a couple of ways, but the most popular one is bi-monthly mortgage payment. If you do that, it can shorten the loan length by, depending on the amount, anywhere between 3 years to about 7 years. So you pay the same amount, but you just pay bi-monthly, meaning twice a month. It's going to shorten your loan length. The other way to do it is put more money toward the principal. You can add $100, $200, $300 every month toward your mortgage payment, but make sure to specify that toward the principal. Then it's going to shorten your loan length significantly. And you can lower it down to about 22 years if you add, like, let's say $200, $300 extra a month. So in theory, if you follow these practical tips, you might be able to pay off your mortgage in 22 years without paying too much extra by monthly payment and a few $100s a month extra toward the principal. Third reason why this long-term hold of your real estate is a good move is because most of the loans that you have that you got in 2013, that loan mortgage rate is going to be lower than the current inflation rate. You might have like 4.5% mortgage right now. If you refinanced in 2019 or 2020, your mortgage is going to be close to 3%. That's almost half of the inflation level, which right now the inflation is over 5%. So no matter when you're going to watch this video, if your mortgage rate is lower than the inflation rate, that means it's better to hold on to that mortgage because you borrow that money, the mortgage, at a lower rate. So you're financially doing much better. So one thing that you want to keep in mind is that let's say you held that property for 15 years or 20 years. When you make more than $250,000 per person, you're going to get capital gain tax when you sell that property. So make sure to talk to your CPA about when you're selling a long-term hold property, what kind of tax that you will have to pay after you sell that property. To sum this up, if you bought a home, a median price home, average price home in your market, most likely in any kind of metro areas, if you bought anywhere between 10 years ago, then holding another 10 to 15 years is a really good move for more than 90% of you watching this right now because of home appreciation, debt reduction, doing better than the inflation rate. I hope that you can apply this strategy to your home ownership so you can do well in the long term. If you like this content, please hit that like button and subscribe so more homeowners like you can watch this video and do well in their real estate journey. Thanks for watching, and I'll see you next time.